to trade stock and options. We have some crypto traders, Cryptoneer, welcome. Lady Godiva, Witchy Jewel, welcome. On Discord, we have more and more people joining on Discord. Thank you for joining. And we have more people on GoToWebinar. To have services using, we have to see static IP. Bill, yes. So if internet provider have a dynamic IP address. If you want a static, you have to call the customer support and pay for static IP and ask them to configure. But like I know Comcast does it, right? So I have a static IP at home. But you have to open up a support ticket. Thank you, Bill, for the question. Good morning, John. Wild Ride pre-market in IMGN, all right. Thank you, John. Welcome back. Fred, good morning. Sounded very good. Present and accounted. Bob, welcome. Okay, then let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel, and today we're going to have a live trading room open to trade stock and option using our technology. For those of you who are new, welcome. We have a few new people on Discord, few new people on the GoToWebinar. Welcome. My brief bio is Executive Vice President, Head of Technology at Option Express from 1999 through 2007. The company went public. 2006, was acquired by Charles Schwab in 2011. Shaped my professional career. Very thankful for that experience. Since I left Options Express, started Tradespoon in 2012, started Yellow Tunnel in 2018. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Trading stock and options involve risk and not suitable for everyone. I must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor, not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, let's talk about trading psychology. We didn't do that yesterday. So again, very important to have a trading plan, right? You have a lot of services, a lot of signals, even in Yellow Tunnel or Tradespoon, there's more than 4 signals, right? Because people join at different time. People have different strategies. Some people trade crypto, some people trade stock, options, futures. So you have a lot of these signals, and then you have to make a decision which of these signals you're going to take. You probably, especially if you're in the beginning of your journey and you don't have a solid trading plan, you don't want to take all of these signals. That's why I encourage everybody to be in live trading room and participate only in 4 positions at a time if you're new to trading, right? You can always ask me like what the best 4 ideas. I'll be happy to answer you. I personally, in my account, you can see up to 10 positions. So I have a little bit more, again, because I'm managing multiple services. So that's very important to understand. So the economy of control basically says that only you have control over your actions and thoughts, and you have no control over thoughts and actions of other people, whether it's Vlad or Jerome Powell announcing, Fed decision today. You have to concentrate on your own trading plan. And the idea of process versus outcome. Very often when we start trading, the only thing that's important to us, and I speak for myself, I did that too, is the outcome at any cost, right? As you learn on your mistakes, you realize that process is more important than outcome, right? As long as you follow the process, you have cash in your account, 30%, 50% cash, you have only 4 positions, you never lose more than 2.5% of account value per position, over a long period of time, you will make money, right? As soon as you deviate from the plan, you double up on or you chase them to, or your losers, let the losers go too long or let the winners go too short, then that's a problem. All right, so process is important. Go through positive and negative visualization is very important. Why? because it ties to this process, right? You have to go through positive and negative visualization when it comes to outcome, right? When it comes to outcome, you have to envision trade go in your favor or trade go against you, right? And that's, most of the new traders don't do that, right? So it's important to do that. You can see we have it on Tradespoon and Yellow Tunnel. In both places, we have guides to how to, what the market model sees. So model turned actually neutral now. It was negative for the past couple of days. We did have a strong rally. We did have a pullback, and now we're kind of again stuck at this 410 level. So on the downside, support is at 406. Overhead resistance is 411, right? That's going to be the magic number, 410, 411. We broke to the upside several times. We broke to the downside. So that's your overhead resistance. Short term, you probably want to short at 411, buy at 406. Obviously, model doesn't know about the Fed decision or the reaction of the market to the Fed decision. Models cannot be trained on that. They can only be trained on past data and make future predictions. But if there is a new data point, right, the data that you feed into the model, you know, speaking of artificial intelligence, a lot of people ask me, any new artificial intelligence, any neural network, even up until now, and probably for foreseeable future, the data is being fed by humans, right? The engines, the AI could make a decision, but it needs data. And humans decide what data to feed into the model, right? In some time in the future, in the next 50, 100 years, AI will be smart enough to feed its own data, what it thinks is the right data set, right? We're not there yet. We're not there yet. So we are feeding the data into these models, and you know, nobody, at least on the screen that you're looking at, we're not trying to train the model on predicting Jerome Powell's speech or the outcome of that speech, right? That's very hard. Some people do that. You know, some hedge funds do that. They try to, I don't know how successful they're doing, probably not. But, you know, at least we're not doing that. So that's an unknown that is not fed into the model. So model will be surprised, right, on the outcome, and then it has to adjust. So potentially we could break out of this range. Most likely we will, right, in the next day or so. I think we're either gonna break above 411 or break 406, right? These are the major support and resistance levels. So when you look at the spiders, I'm going to periodically, okay. When you look at the spiders, right, we are close. This is 1 hour chart. So 50% retracement, 411, 412, this is your overhead resistance. Model basically says we're not going to break to this level. And on the downside, we've retested yesterday 408, model sees 406. So those are your key support level, right? So yesterday's low, I would say, is your support. Overhead resistance is 411. I think pre-market we're 411.51, so let's call it, well, yeah. So those are the two levels. Market is probably going to trade for the next couple hours, and then 1 p.m. Chicago time, 2 p.m. Eastern time, Fed decision. We also have services PMI. I don't know how much impact it's going to have in the next 25 minutes, right? That's usually what happens. And then those are your next level of resistance, right? So this is resistance 1. If you're day trading, short term, preparing for outcome, and then support. So the negative visualization, positive visualization, let's say you think Jerome Powell is going to be able to convince the market that we don't have any issues in regional banks, that nothing to get worried about, that inflation is under control, and potentially we're going to have some kind of quantitative easing because the liquidity is drying out in the credit markets. Market will rally, right, and probably reach 418 very quickly, right? If he doesn't say that, right, if he does not say something along those lines, then most likely market is going to pull back because it's sitting on the edge and regional banks already breaking down, crude oil already breaking down. You see rallies in gold. So then very quickly we're going to be at S2, right? So you have to go through both scenarios. If you're bullish, you have to envision that maybe we'll get to S2 and break that level. If you're bearish, maybe we'll get to resistance 2 and break through that level and get to 430, which would be August high, close to 52-week high. So that's the purpose of negative and positive visualization. I encourage you to do that. You have Stock Forecast Toolbox that allows you to do that, right? On short-term 10-day predictions and also on the 6 months prediction. On Yellow Tunnel, if you look at Earnings Power Trader or you look at Profit Accelerator or any other services we have, same thing. In addition to stocks that I'm trading, you also have support and resistance levels and trend analysis in terms of where the model sees potentially spiders reaching. All right, let's go through earnings, right? So yesterday at the close bell, we did some of the earnings. I talked about Starbucks, Ford, AMD, CVS, right? Starbucks is down 4%. Ford is flat. We did Ford trade, right, in Earnings Power Trader. So now we have to manage it, right? The Ford trade. So look at the Ford trade, pre-market. Let's take a look. So I'm going to put an order to close that before not taking too much risk. You probably want to close it before, you know, we have FOMC decision. So I'm just going through my pre-market trades. All right. All right. Let's see. Looks like I got kicked out of Trading View. Let me. Robot. Okay. It's very annoying. All right. Well, at least it let me in. Okay, so pre-market, let's go through the trades. So Ford, I did do the Ford. Ford is slightly up 1%. So I definitely want to, I think the risk is to the downside. So let me close the put first. It's actually flat. 1 cent. Okay. So if you look at the earnings power trader, I did close 10.5 put, right? So now I have call. Call is trading at 2 cents. So I'm going to close for 2 cents. Okay, so I want to be out of this trade. So I'm out, both short calls and short puts. It cost me 3 cents to get out of the trade. I collected 8 cents. So 5 cents on $10 stock. I mean, minus hedges, but it's 0.5%, right? So 5 cents might not look like a lot, but 0.5%, you know, that's the goal. On a $10,000 account, you do not want to risk more than $250, right? 2.5%. So here, you know, the spread was a little bit more. And again, $10,000. So that means I trade stocks that are less than $100, right, or close to $100. So that means one contract if you're doing $100 stock, and maybe 3 or 4 contracts if you do, you know, $13 stock. Right. So always the same size. You always translate the value into equity, right? Because when I did MPC, that's one contract. That's $1,200, right? $12,000, right? 100 shares. So if assuming MPC and Ford moves in with the same beta, then it's, you know, well, you can do 10 contracts on Ford, right? So always same amount. That is the most common mistake, is that we are trading stock and everybody always does one contract, always 5 contracts. But, you know, if you do one contract of MPC and one contract of Ford, doesn't matter if you're buying premium or selling premium, you have different exposure. And you don't want, you know, in theory, you don't want to do that. All right. Any questions on the Ford trade? Let's look at some other earnings. So Barrick Gold up 1%, CVS down 4%, AMD down 6%, Starbucks is down 6%. Okay, so let's not take too much risk in Starbucks. 104%. So I did, if we followed the live trading room yesterday before the close, I said 104 put. So I have to be very careful. So far it's out of the money, but obviously I want to close it before the earnings. I mean, not before the earnings, before the Fed decision. Because after Fed decision, if it's negative, Starbucks is going to sell off more, right? Despite the demand in, you know, reopening in China. And today, Estee Lauder announced earnings, kind of same setup, right? So 20% down. So the whole China reopening theme is kind of on hold right now, right? Not a lot of people believe that, and China is sitting at year-to-date low, right? So just, you know, going into this decision, again, very, very vulnerable setup, whether it's China or crude oil. And you can see crude oil is kind of falling off the cliff and retesting 52-week low. All right, CVS and AMD. CVS. $70. CVS is also pulling back. Let me know if you guys have any questions. All right. So Ford, let me close Ford. So crude oil continues to deteriorate. Let's see. Okay. 839 spiders, kind of flat, right? Sitting on this overhead resistance, not moving anywhere. And it's all about, rates. Bond market, is concerned about the Fed decision, right? It has very little faith in Jerome Powell's speech, so it continues to deteriorate, right? Sitting at the very important support, right? 5-year, 10-year, kind of sitting at April lows, right? Close to April lows, close to March lows, right? So very important level, right? If we have notion of quantitative easing, then the rates will go up and the market will go up. If we have a notion of quantitative tightening, then the rates go down, break through this level, and then the market follows to the downside. So rates are very important. I would watch the rates. I would watch the dollar also. Weak dollar is good for the market. Strong dollar is bad for the market. Let's see what else. Let's look at some of these charts. All right, so it looks like CVS is rebounding. It was as low as 69. Let's look at AMD. 83. So AMD 83, I have 79 put. So it is getting close. So I want to please trim. Break even now on the put. Make money on the call. So we looked at AMD, we look at CVS, we looked at Ford. Right, Starbucks. It doesn't look like it's trying to rebound. Spider's flat. Starbucks is trying to find support. Let's see if it switch to 5 minutes. So I have 104 put, trying to decide whether to close it or wait for a bounce. It's 843. So it looks like it's trying to find the bottom. Let's look at MPC. We don't have to look at MPC anymore. We don't have to look at MGM. All right. KRE turned positive, so it's good. It was down pre-market after yesterday's sell-off. But again, regional banks, I mean, now this is overhead resistance, right? The yesterday's sell-off was kind of sitting on the support for a while, or it then kind of precipitously dropped. And the rebound so far is weak. All right, so we're looking at AMD. Let's see, is AMD stabilizing? Trying to. And then Starbucks. Let's see if Starbucks can catch the bid. Okay. Ford, CVS, there it goes. So Starbucks and AMD. Those are the two puts I have to be careful and watch. I mean, it's still pretty far out of the money, but obviously the sell-off can accelerate. All right, let's see questions. Discord. Any questions on Discord? From start date, I just now have started to figure Discord out. I finally know how to navigate, sir. Would love the chance to watch this live if possible. Kryptonure, we are live. Is there an audio? I don't hear anything. I'm here. Yes, audio is working. It's okay now. You can do that for Vlad for sure. Thanks for participating. Love it. First time we actually have a chat. It's awesome. So Kryptonure, I assume you trade crypto. One interesting observation that I've read is that Bitcoin, if you compare Bitcoin for all the Bitcoin enthusiasts, at least in the past couple months, if you compare Bitcoin to the chart of gold, they are very, hold on a second, ARC. They have been very, right, so ARC is gold, right? This is gold. Let's do it again. Bitcoin compared to gold trust. GOT. Doesn't really show that. Let's do gold futures. They're gold futures. Gold futures. Also not very good. Bitcoin compared to gold SIBO 1 GLD. Bear gold. Symbol tab. Not getting any love, but anyway. So if you look at the chart of Bitcoin, probably from the bottom, from October, right? It's in a strong uptrend, right? And if you look at the chart of GLD, from October, I mean, much higher, right? It's much stronger, but very, very highly correlated for the past few weeks. So something to keep in mind in terms of correlation. To watch this live if possible. Right, so we're live, Cryptoneur. We are live. Thank you for participating. Lady Godiva, thank you. All right, present as usual. Good morning. Faust, welcome back. John, I'm here. Don't worry about that. The one has. Thanks for your greeting. Thank you, John. Appreciate it. Thank you, John. All right. Okay, any questions? All right, it's 8:49. So if you're still in these earnings trades, I have Starbucks and I have AMD. I don't like the price action of AMD. Maybe it's, it kind of continues to deteriorate precipitously. So I'm going to close my put. Let's see. Close half of AMD put. See, replace 48. I mean, usually I wait 15 minutes, right? If the 15 minutes it's not stabilizing, continue to drift lower. I mean, even though I have 79 strike, I'd rather just, between puts and calls, probably broke even, right? So, I don't want to take the risk, so I'm out of AMD. It's not finding any bid. After 15 minutes, Starbucks doesn't look any better, right? And that's a head scratcher for soft landing. Right, if China is reopening and growing at 66.5% GDP, why is Estee Lauder down 20%? Why is Starbucks down 7%? The idea that people, they might be, which company that I forgot. I mean, maybe they're buying Microsoft licenses, and maybe there's another company that benefited, but it's at least Estee Lauder, Starbucks is not doing that great, right? Next one is Apple, right? Apple is on Thursday. They also have a lot of exposure to China, so that's concerning, right? That's concerning. All right. Right, so I'm gonna watch Starbucks. That's the next one I need to trade close. Okay, so now I have Starbucks put. We'll see if Starbucks can stage a comeback. AMD doesn't look like, but Starbucks maybe. All right. So outside of that, let's see what else is interesting. Materials are so far, I mean, staying above 50-day moving average, above 200-day moving average, but again, sitting on these key support, 50-day moving average, similar to spiders. Home builders are vertical move up, kind of retesting year-to-date high. Again, very sensitive to interest rates. Metals and miners, strong pullback, right? It broke through the March low, broke through December low. So copper, right, that's also proxy for the economy, is not doing that well. Sitting in the key support, December low, very sensitive to interest rates, right? So, you know, Fed has to deliver something along the line of quantitative easing, right? That they recognize the problems that the economy is slowing down. They're a little bit concerned about First Republic Group, you know, kind of, you know, defaulting. How's PacWest doing today? That's the next guy standing, right? They trying to find stability, right? Hope that Jerome Powell is going to put the put below these regional banks. China, emerging market, right? That's kind of a head scratcher. You know, not, I guess, reopening not as fast as everybody anticipated. People are not buying, you know, they're buying, you know, maybe Louis Vuitton bags. Yeah, that was Louis Vuitton bags. So there's definitely demand for Louis Vuitton bags, but not as much demand for Estee Lauder, you know, cosmetics, or, you know, drinking Starbucks coffee. Even though they delivered very strong earnings, right? They beat on bottom line, top line, you know, guidelines was in line, and, you know, stocks pulled back again because it's overbought. Most likely reason is, you know, unless you hit a home run, even if you beat an up, you know, on the bottom line and top line, and give a decent guidance, you know, people still questioning that maybe the stock has doubled and maybe it's a little bit overdone. You can see it in Starbucks, you can see it in AMD and alike. All right, Starbucks is rebounding. Let me trim a little bit. Okay, so a trim cap of the Starbucks. Puts a 104 put, but, you know, between puts and calls, still profitable trade, but don't want to take the risk. Same thing with the AMD, and they're kind of having a hard time finding the bottom. LA Lilly, you know, I think I'm out of LA Lilly. Let's see. What did I have as a position for LA Lilly? Did I get close? I mean, obviously, you know, between the weight loss drug and now Alzheimer's drug, this is just, you know, an ordinary stock, extraordinary stock. Continues to trade higher. I mean, I do have 430. It's getting close. So I'll be out of this trade if it does reach 430. But again, you always, you know, elevator up, there's always elevator down. The question is, you know, which floor is it going to stop? Is it on the first floor, second floor, fifth floor, tens, hundreds? That's hard to ascertain, right? But it's kind of vertical move, and, you know, I basically trimmed it yesterday, and, you know, planning to close it at 430. Thank you, Bob. Dunkin' Donuts. All right. Lily from Italy. I drink tea. No, I had my coffee. I'm, what the hell is that company called? I'm drawing blank. Coffee machine. Where is coffee machine? I do like Italian Lily, but Nespresso. Oh, so, okay. The best coffee maker 2023. Mocha Master, KBGV, and next one is Nespresso. So I'm drinking Nespresso. My wife always buys the latest, greatest coffee machine. So this is my machine. That's what I drink every morning. Second best. Okay. All right. Any other questions? Keurig. I used to drink Keurig, not anymore. I drink what my wife drinks. Like, I don't really care. It's no coffee is coffee. But Illy from Italy, Keurig, and now we are Nespresso. I mean, it's everywhere. Okay. Spiders slightly higher, Bing slightly higher, ARC slightly higher, Apple's KRE rebounding, Lily is up, CMG is up. Let's see, Starbucks. So far, pretty weak rebound, not going anywhere. Probably want to get out of this trade altogether. Plus, geopolitical risk, right? There's 2 androids got shut down over Kremlin. Actually fell on Kremlin. I mean, that's Red Square, right? That's, very symbolic place for Russians and for Russian government. So I'm sure there'll be some kind of retaliation of some kind. I guess we'll have to just wait and see. So geopolitical risk right now, stock market is not reacting, but if there's some kind of escalation, it could react very quickly. Also concerned. All right, let's review other positions. Okay, so CMG, again, similar price. I mean, not as strong as Lily, but you do see a breakout, right? After better than earnings, it's a pretty good breakout. As long as it's above this breakout line, I'm not concerned. Obviously, after the Fed decision, you have to go into the Fed decision. This is the idea of, if you're new to trading, you don't have a solid trading plan, you're learning, you want to revisit, you want to only have 4 positions going to the earnings, and maximum loss is 2.5%. So if you, after, let's say Friday, we're trading somewhere, more conservative, I would say here, right? So CMG can drop here basically in a week or two, right? Very quickly. So let's call it 1,800. So it's about $250, right? So on one share, you can lose $250, right? And then you're out, right? So the idea is not to be out, not to lose more than $250. Obviously, if you have 100 shares, one contract, that's too much, right? You want to consider doing some kind of a spread, so you limit it to $250 loss. If you can't trade options and CMG is not a liquid stock, then you buy one share. If it drops, 5%, or no, this would be more, 10%, right? If it drops 10%, that's your $250. So on a $10,000 account, if you knew, I would just hold one share, right? And you go through all your 4 positions. You want to make sure that you're not going to, if Fed is going to be hawkish, right? Because inflation is higher than they expected in the United States, in Europe, and the only way, and they don't want to be cornered, right? Everybody's concerned that the expectation that they will pause, right? Last rate hike, and they will pause. So they have to say that. If they don't say that, if they try to kind of leave the doors open, then that could be an issue, right? That could be an issue, right? So then I would, if they don't say that, and they say basically, listen, we don't know if you're going to pause or not, right? We want to be data dependent, higher for longer, and we don't want to say anything along that we are pausing, right? Market doesn't anticipate that, and if they say that, that would be considered hawkish, and then you have a quick pullback, and CMG probably not going to be an exception. We talked about Ford. Out of Ford, IWM. I did close the June position, right? So it was a quick trade, 20% profit. I decided to close. So I'm out of the June, bearish IWM position. It's a little bit oversold again. Russell 2000. This is more of a bear argument, right? If we are trading in the bull market, why is Russell 2000 close to 52-week low? That should not happen, right? And it's sitting on the key support. So I still think the support is going to be broken because we are trading in the bear market. Whether it's going to be broken by June or I don't know, but by September, most likely, right? More likely, not most likely, more likely. More likely it'll be broken. So I left the July calls, September calls, bearish call spreads intact. We talked about LA Lilly, MPCM out. Actually, 105 put, I can close. Let's see, I forgot about one. I'll leave it. Maybe I can actually recoup some of my losses. Let's see, positions. MPC put, trading at 5 cents. If the sell-off is going to accelerate, maybe I can sell it for 15 cents. Okay. We'll see. Oil's kind of not doing that great. Right. Oil drill is also sitting at the 52-week low, right? Despite demand from China, everybody's traveling, going to casinos, right? MGM, right? MGM delivers strong earnings, and you can see it's kind of slowing down, right? Because of the China, Macau casino reopening. So, all right. After Powell, if there would be a pause, would you consider an out-of-the-money call on Starbucks? Ted, out-of-the-money call Starbucks long or short? On a weak stock, I would not buy call, right? Especially out of the money. It's a gamble. Selling out of the money call after, also you have to be careful because we have a lot of data, right? So there's a lot of data that's coming out, right? So we have Fed decision. Most likely, it's not going to be neutral, right? We have services data. How does service data? 8:45 on 9. So it came out. Let's see. Is market reacting? Let's see. Watch list. Let's look at. So interest rates are dropping. So it's probably came in worse than expected. Let's see. Let's just look at the ISM data. It's probably not going to change Fed decision, but going forward, it might. ISM index 51.9 versus estimated 51.8, previous 51.2. So a little bit better than expected. ADP report employers are hiring aggressively. Okay. US ISM 51.9, prices paid 59. So prices paid a little bit higher. Employment a little bit lower, new orders much higher. So, well, I guess neutral decision or reaction, right? Down, up. So, and the market for now not reacting. Everybody's waiting for, Fed decision. But after Fed decision, you do have employment, right? So now everybody is looking at the employment data, and then Apple, right? Apple is the last man standing, right? That kind of supports the market, and the last major earnings announcement, right? Next week, it's all going to be, earnings. You're going to have these violent moves in interest rates, right? You're going to have, 3-4% move every day in interest rates, and it's probably going to continue into the next week. But anything I would, on a weak stock, I would sell calls. Long, yeah, out of the money long call, it's kind of, you have very small, right? You look at the implied volatility, that, delta, it can give you probability. It'll be delta 30 or delta 20. It means 30% chance you're going to make money. And because it's weak and China is decelerating, I would not do it, right? I would find some strong stock that's benefiting from China, like MGM, right? At least MGM, after earnings, got a strong rally. It's pulling back, but I would wait a day or two after the Fed decision, after Apple stabilize. Okay, buy MGM call because you think it's going to break out, right? But, it had a strong reaction, and it has, kind of a momentum, from China reopening, right? But I would not buy a stock that you already know nobody's buying, right? And kind of, this is not a good price action, right? There's no matter how you put it. So yeah, I'm glad I closed that short put, right? Because it's just kind of falling off the cliff, probably after the decision, right? So kind of A, B, C, right? A classical for day trading or longer term trading, right? You have A, then, Ted and millions of other people want to buy out of the money call, right? They get sucked into this B wave. Sometimes it's strong, right? Sometimes it's fast. And then you have C, right? And C probably going to continue. And now it's getting close to 104. So I'm glad I'm out of that trade. Let me just double check. All right, so I'm out of AMD and I'm out of Starbucks. Okay, good. That's good. All right. Thanks, Ted. Right, I'm not a mean reversion, right? I don't like to buy weak stocks, right? Some people do, right? Starbucks is a great company. It sells off. Okay, let's buy it. I mean, you're trying to catch a fallen knife, right? I mean, obviously on Meta, it worked really well, right? There are a lot of people that basically said that, like, I would analyze Meta earnings. So the second drop was kind of, that was the bottom, right? But you wanted some kind of stabilization, right? You want some kind of stabilization. So same thing. I would wait for it at least to close the gap and start breaking to the upside, right? Here. Then it's a good setup, right? You have, a few weeks worth of data, right? Let's look at weekly chart, right? Of Meta, right? It's just kind of one earnings bad, second earnings bad, and then you have a recovery, right? You have 1 week up, 2, 3, 4. Okay, you have 2-3 weeks, it's not making new lows, you love Meta, okay, you go long, right? And okay, that's a pretty good rebound. So same setup would be with Starbucks, right? You wait 2-3 weeks, it's not making new lows, right? It has, something like this, week 1, 2, 3, 4, not making new lows, making highs. You love Starbucks, you think China is gonna, reaccelerate its reopening at some point, and then you buy out of the money calls. Right, but before that, you just don't know how far this pullback is going to go. QQQ, I'm bearish, right? So I have May call spread bearish. I have June. May, it's kind of 50-50 chance at this point. Well, not 50-50. I'm thinking the risk is to the downside. But still, it all depends on Jerome Powell and Apple earnings. I don't think they're going to be great, so that's why I'm bearish in May, but more confident in June and September. right? That I have stronger opinion. Maybe we'll see. If you're not comfortable hedging your position using options like QQQ puts, one way to hedge out of those 4 positions, right, to minimize so you're not down 10%, right? If you have all 4 bullish positions, you could be down 10%, which is, I guess, according to the trading plan, that's kind of average drawdown in portfolio when managed by professionals. They don't want to have more than 10 to 15% drawdown, right? But to minimize that, that means you need to have some long and some short position. Some short position could be SH, right? That should benefit from market pullback. Silver, right? I added to silver yesterday and actually closed partially, but still have the silver position. That should benefit from market pullback. And treasury, right? You know, if TLT goes up, that means equity market goes down, right? Bond market goes up, equity market goes down right now, or vice versa, right? Bond market goes down, equity market goes up. So you could, those are the 3 ways to hedge without options, right? They all should go higher if the market pulls back. And then finally, XLF and Russell 2000, I think they're the weakest link. And you can see XLF is kind of already started with its pullback. Right, same thing. Wave A, right? So whether it's day trading or weekly chart, it's these waves. Market does trade in waves. So you have wave A, you have wave B, sometimes 50% retracement. You know, probably wave C has started. Right? I mean, it depends on the Fed decision, right? You know, if the Fed quantitative tight easing, then we could rally and maybe get to this 50% retracement. We're not there yet. Maybe even a little bit higher, 62% retracement. Right? That's possible, but I still think it's just a matter of time. To do this. I mean, whether it happens beginning of summer or end of summer, I guess we'll see. Carl Icahn managing UL. I mean, Carl Icahn, you know, not a good news. So I would, and UL, I think they're either think about bankruptcy or, you know, or having some issues. You know, they're at 2020 low again. I would not buy weak stocks. It's actually, I think it broke lower. I think they're having issues. I think Carl Icahn has issues. I would stay away from the stock, personally. Every time you have a cloud of negative news, you just don't know how far it's going to go lower, especially in this environment. KRE, I mean, KRE is the good debate, right? KRE is sitting at the pandemic or approaching pandemic low, right? I think it's the same thing, right? You have a strong wave A, you have some kind of consolidation, very weak consolidation, and probably wave C has started. So there are 2 philosophies. There is one philosophy that I go, like, I would not catch a falling knife. I'd rather be late than early, right? I'd rather go into the trade late, you know, when it's here, than, you know, get into the trade and only see it here, right? Some people who don't believe in technical analysis, or basically believe that you cannot call the bottom, which is true. Very few people, nobody can call the bottom, right? Nobody can call the bottom, then you can start using dollar cost average, right? You buy at 39, then you buy at 32, 28, and who knows, maybe you'll have to buy it at 20, right? But you break that apart, making sure that if it reaches 24, at least 28, that you don't lose more than $250, right? So 28, that's $10 drop. Okay, you can buy 10 shares, right? I would not lose more than $100 on this trade. So I would buy 10 shares. You know, maybe it can go to 48, maybe it can go, maybe at some point it's going to go to 80, right? So, okay, so you can, you know, make a nice return on your money. But I would do it with the idea that at 28, I'm not down more than $250. And personally, I think there is more, you know, if the market is going to pull back, KRE is going to lead, right? Regional banks is going to lead the downside, small caps, oil companies, energy companies, and banks in general. All right, it's 9:17. So yeah, I would, on day trading, short-term trading, I would close positions, right? If you're a day trader, you do not want to have short or long positions going into the event because usually it's extremely volatile, right? It can go up 2%, next hour it can go down 2%. It will follow what people think, Jerome Powell means, right? Nobody knows exactly what he means. So it's open for interpretation. It's going to go up 2%. It's going to go down 2%. So you don't want to be day trading. You don't want to have these, you don't, personally, if you follow my, kind of trading, I'm out of Starbucks. I'm out of AMD, right? Yeah, AMD can rally 7% and close flat by end of the day, or it could drop another 7%, right? So you just don't know. Same thing with Starbucks. So I would just be careful for day trading. Longer term trading, you just want to reevaluate. If you're new to trading, if you don't have a solid trading plan, if you're not very confident, then I would just make sure you don't have 4 positions. Look at the worst case scenario, right? We reviewed Spider's trade. You can see that market is probably going to pause at least at 200-day moving average, right? So right now, 407 is your first line of defense, right? We can drop to 407, then the next one would be 50-day moving average. So if we reach 402, or if it's really bad news, then maybe even 200-day moving average. That's about 2-3%, right? So we can quickly drop 2 to 3%, right? 15 points, right? 3-4%. It could happen, by end of the week. Right. So if you're long, you want to make sure that if we do reach 200-day moving average, that you're not down more than 10% in your 4 long position. If you're overly bearish and you have 4 short positions, same thing, right? We could reach 4 probably this trend line, or even 430, right? If Apple has a great earnings and unemployment is low, and there's a sense of quantitative easing instead of quantitative tightening, we're going to be at 430 by Friday, right? So same thing. If we are up 3-4%, you do not want to, on your short position, you do not want to be down more than 10%. All right, that's all I have for today on YouTube. Thank you for participating on YouTube. We do have a live channel on YouTube. We have a broadcast today. Please, if you like it, click on subscribe. We do have people watching the live trading room, 60, 70, 80 people. I appreciate that. That's really good. If you haven't clicked on subscribe, please click on subscribe. It helps us with our marketing effort. It helps people who are watching, navigate the volatile environment. We're going to have another broadcast today at the closing bell. Please join us. Other than that, what else? Oh, and we do have on Yellow Tunnel, if you like to save money, then and you trade in options, Yellow Tunnel LP trade year offer. Right, that's something you can save commissions. Basically $10. You will only pay $10 a month. Doesn't matter how many option contracts you buy and sell, right? Most of us who trade options spend a lot more than $10, right? So if you can save, $50-100 a month, that's worth it, right? It's a Chicago brokerage, FDIC insured. Not Chicago, I think they're South Carolina or North Carolina, but they have Chicago branch. And I know a lot of these guys. We have marketing relationship. Consider opening an account and saving money on commissions. All right. Have I looked at the earnings? I won't be here. Yeah, I have not looked at the earnings yet, right? I'm going to wait for the I have to wait for the Fed decision. I have to wait for a decision after close today. After close today, I don't see anything interesting today. Let's see tomorrow morning. Apple is after, Square after. nothing stands out as liquid, right? You want something that's liquid, right? We don't want, we even see with MPC, 4 million shares, stock was flat at the open and options did not move. Tomorrow it'll be similar thing. So you want something like Ford, 10 million shares, 20 million shares, where bid and ask is spread very tight and options are, there's big open interest for these contracts, especially after the Fed decision. So I would not do, like PPL or CAH, I just wouldn't do it, right? They're just not liquid enough. So it doesn't look like anything of interest tomorrow. But again, watch Elite Circle, watch earnings. You can put your phone number. And if I do find something that's of interest and liquid, I would do it. If I don't, then I'll just wait for tomorrow for Apple. Qualcomm. Qualcomm is liquid. So Qualcomm, I will do Qualcomm. Let me see. Yes. Qualcomm, I mean, let's wait for the Fed decision. I assume volatility is going to pick up. It does have average volume of 6 million shares, so I think that's pretty liquid. I mean, similar to MPC, you might have this issue where, in the morning, even though it's flat. So you just have to be careful. Even with 5 million shares like Qualcomm, you have to be careful because of the volatility today and tomorrow, right? It could be like MPC, where the market makers are just not going to move the prices of the options. And actually, the prices were higher, even though stock is flat, the option prices are higher than they were the day before, right? It didn't happen to Ford because it's liquid. It didn't happen to, even Barrick Gold, volatility drop. But, on the liquid stocks, you just don't know what's going to happen. But I do like Qualcomm. I usually do it, so watch it. I will see how tight it trades and, how much premium is there. Because VIX is kind of, surprisingly low, right? And they need to figure something out about VIX. All right. Yes, Trader Brokerage from Cedar is insured. Yes, John. John gets text message, all right. Away from the desk. Fed announcement, the idea is, I mean, everybody's very nervous, right? And if you're not nervous, you probably should be, right? Because the expectation right now that they're going to raise by 25 basis points, and Jerome Powell will clearly say something along the line that we're going to pause and we're going to be data dependent. And everybody, not everybody, but a lot of commentators that I watched on Twitter or Bloomberg, basically saying that he's not going to be cornered, right? And they are alluding to 2006, 2008, right, when the Fed was raising interest rate. There was an article in Wall Street Journal basically saying that I think Greenspan was in 2006. He basically used the language to never put himself in the corner, right? Like lawyers, like my wife is a lawyer. She will never let you corner her, right? She will always say something where she can go, open door A and open door B, right? And Jerome Powell is the same way, probably. He's like an attorney who's not going to corner himself. And if the inflation is going to continue going higher, he wants to be able to raise 25 basis points next meeting, right? And I think market does not anticipate that, and they don't think Jerome Powell thinks like an attorney. So if he's going to have a message like an attorney where he doesn't want to corner himself, I don't think market is ready for that. So I think the risk is to the downside. Listen, now we're going back, now we're going back to the principle of trading, right? The economy of control, right? What is the economy of control? Let's just review that again since we're asking that question. Right, in terms of answering, do I want to add to hedges? You only want to add to hedges, not because you think you can predict what Jerome Powell is saying, right? But some things are written within our power, while others are not. Within our power are opinion, motivation, desire, aversion, and in the word, whatever is of our own doing, not within our power, our body, our property, reputation, office, and word, whatever is not of our own doing, right? Epicus. So basically, this has been, this principles have, humans have probably learned that, thousands of years ago, and nothing has changed, right? If you think that humans have evolved in the past 4,000 years, their psychology, right, their mental state, probably not, right? The way we felt 4,000 years ago is the same thing, or 10,000 is the same way. We might have an iPhone, and Apex did not have an iPhone, but we think alike, right? So the idea, so the answer, like if you ask Epictetus whether you should hedge into an event, right, like on the Fed decision, the answer is you cannot predict what Jerome Powell will or will not say and what would be the outcome of that event, but you can control your own thoughts and actions. So again, it's a simple rule. Go through your positions, look at your 4 positions, go through the positive and negative scenario. If it goes against you, you don't want to be down 10%, right? There's certain drawdown, right? Whether you're new or professional money manager, right? You have certain goal, right? When you deliver your reports to your, clients, you are promising them that your portfolio will never be down more than 10-15%. Okay, so how do you prevent that? You buy hedges, right? So if you look at the worst case scenario, what if, and if the market drops 5%, you want to make sure your portfolio doesn't drop, by 15%, right, or 10%. So you shouldn't make a decision on hedges because you're concerned about Fed. You should do it because you're just concerned, and you want to maintain certain drawdown in your portfolio. All right, that's all I have for today. Thank you very much. You guys have been great, and I will see you tomorrow morning. We'll talk about Fed decision, and Scott will cover closing bell today. Thanks a lot. Appreciate Discord participation. A lot of messages today. I'm like super excited that we are finally have conversations on Discord. I was a little concerned about that. All right, so Discord guys, thank you, and go to webinar. Thank you. Phil thing. Yeah, Scott is on with the closing bell. All right, guys, thank you very much and have a great day.